Robert Shiller published this book weeks before the dot-com crash. One ratio inside it still works, and what it is saying about American shares right now is uncomfortable. This is Irrational Exuberance by the Nobel laureate Robert Shiller. The title was borrowed from a warning by the head of the US central bank, and Shiller turned it into the definitive book on why markets periodically lose their minds. His timing, the first time around, was almost supernatural. The first edition landed in early 2000, just as the dot-com bubble was about to burst. Investors had convinced themselves the internet had rewritten the rules of value. Shiller, calmly, said it had not. Within months, the Nasdaq began a fall of roughly 78% from its peak. His central claim is deceptively simple. Markets do not move on fundamentals so much as on stories about fundamentals. A powerful narrative, a new economy, a miracle technology takes hold, and prices start to reflect the story rather than the cash flows sitting underneath it. Then a loop kicks in. Rising prices seem to prove the story right. The media amplifies it. Skeptics are mocked. New buyers pile in because prices are rising, and prices rise because new buyers are piling in. For a while, being wrong feels exactly like being right. Eventually, something small breaks the spell, and the same loop runs in reverse. Shiller traces the identical pattern through the South Sea bubble of 1720, the 1929 crash, the dot-com bust, and the 2008 housing mania. Different story each time, the same machinery underneath. To measure the mood, Shiller built one number, and here it is across a century and a half. It spikes at every famous top. 1929, the year 2000, and the reading on the right is not comfortable. Each of those earlier peaks was followed by a lost decade for investors. The number is the CAPE ratio, sometimes just called the Shiller P. Instead of dividing today's price by a single year of earnings, it uses 10 years of earnings, adjusted for inflation. That smooths out the boom and bust of company profits and gives you a far steadier read on whether a market is cheap or dear. And the history is blunt. When Shiller's ratio has been high, the returns over the following 10 years have usually been poor. When it dropped below 15, the next decade tended to be strong. It tells you almost nothing about next week. It tells you a great deal about the next 10 years. In late 2025, the American market sat near the top of its historical range, with the whole conversation fixed on artificial intelligence. Nobody knows whether that story is right. That is precisely the point. When price and story are bound this tightly, Shiller's work says the valuation is worth watching. For a British investor, there is a useful twist. UK shares have often looked far cheaper than American ones on this same measure. That does not mean sell everything and pile in, but it is a fair reason to hold a genuinely global portfolio, rather than quietly betting the lot on one very expensive market. Practical lesson is a habit of mind. When everyone agrees an asset can only go up, that is the moment to be most careful, not least. Ask whether the price is justified by earnings and cash, or only by the story. The crowd is at its most confident right at the very top. Beyond that, the advice is refreshingly dull. Diversify across countries and asset classes so one market's mania cannot sink you. Keep a long horizon, because valuations revert over decades even when they look insane for years. And write down why you bought something, so you can tell a broken thesis from a passing wobble. Our honest take. It is a serious book, and parts of it read like the academic paper it grew from. But the core framework, that stories drive prices and that one patient ratio can flag when a story has run too far, has aged beautifully. 25 years on, it is arguably more useful than ever. So keep the one idea that lasts. A high price is not proof that the story is true. It is only proof that the story is popular. Notice when a market is paying for a story, keep some of your money somewhere cheaper, and you will sleep through the manias that ruin other people. Our full written review of Irrational Exuberance is linked in the description. Follow, like, and subscribe for more.